Check out these ETFs for long-term returns. These ETFs have a history of outperforming the S&P 500. Invesco S&P 500 Top 50 ETF. Why invest in 500 companies when you can focus on the top 50 instead? Vanguard Growth Index Fund ETF. The ETF is filled with tech stocks and has outperformed the stock market. Ishar Semiconductor ETF. If you like AI and semiconductor stocks, you'll enjoy this ETF. Let's dive in. Here are the 3 ETFs to buy now, second quarter edition. Welcome to Timely Investment Research. You don't have to pick individual stocks to get closer to your financial goals. ETFs can do the job just fine as they offer portfolio diversification. However, some funds are better than others, and it's possible for a fund to be over-diversified. The best funds strike a proper balance of diversification and prioritizing promising stocks. They also align with the fund's objectives. A growth fund will have more companies with high valuations and meaningful upside potential. Income funds play it safe and focus on dividend-paying stocks. Investors looking for some of the top ETFs may want to consider these top picks. Number 1. Invesco S&P 500 Top 50 ETF. The Invesco S&P 500 Top 50 ETF is a testament that too much portfolio diversification can be a bad thing. This fund only holds the top 50 stocks within the larger S&P 500, and it has outperformed its larger counterpart. XLG is up by 96% over the past 5 years, while the S&P 500 is up by only 74% during the same amount of time. Since XLG spreads its capital across fewer stocks, it has larger concentrations within the Magnificent 7 stocks. More than 40% of the fund's assets are in the information technology sector. The fund's top 3 stocks are Microsoft, Apple, and Nvidia. These positions make up 12.65%, 10.34%, and 8.79% of the fund's total assets, respectively. The other Magnificent 7 stocks are close behind. The fund has a 0.89% SEC 30-day yield and a 0.2% expense ratio. It's already off to a good start and is up by 11% year-to-date. Unsurprisingly, that's better than the S&P 500's 8% year-to-date gain. Number 2. Vanguard Growth Index Fund ETF. The Vanguard Growth Index Fund ETF is another top-performing fund that has more than doubled over the past 5 years. It has also outperformed the S&P 500 with a 12% year-to-date gain. More than half of the fund's total assets are allocated toward tech stocks. The top 3 stocks for Vanguard Growth Index Fund ETF and Invesco S&P 500 Top 50 ETF are identical, and other Magnificent 7 stocks are close behind. The fund offers a 0.46% 30-day SEC yield and a reasonable 0.04% expense ratio. Low expense ratios are a signature component of Vanguard ETFs. Most of the fund's assets are large-cap growth stocks. Vanguard rates the fund as a 4 out of 5 on the risk-reward scale. The fund has been around for more than 20 years and had its inception date on January 26, 2004. You'll only need a $1 minimum investment to get started. The fund is rated as a strong buy with a projected 13% upside. Number 3. iShares Semiconductor ETF. The iShares Semiconductor ETF has more than tripled over the past 5 years and is up by 18% year-to-date. The fund invests in companies that benefit from the rising demand for semiconductor chips. Many of the stocks in iShares Semiconductor ETF have benefited from artificial intelligence, which explains the 55% gain over the past year. Nvidia is in the driver's seat and takes up 8.88% of the fund's total assets. Broadcom is a close second that makes up 8.24% of the fund's total assets. This fund will continue to thrive as long as AI continues to gain momentum. Semiconductor stocks can still grow even without AI since the technology is used in many devices, appliances, and other products. The fund has a 0.35% expense ratio and doesn't offer complete portfolio diversification. It gives investors outsized exposure to semiconductors and AI. Investors seeking portfolio diversification should buy a fund alongside this one instead of putting all of their capital into iShares Semiconductor ETF shares. So far, the results have been pretty good. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.